Hey y'all, welcome back to my YouTube channel. My name is Alayla and I trade Trendline. Today we're gonna go over a brief explanation of how to use Fibonacci Retracement Tool, how to use it with market structure, how to use it within the trend, how to see where the retracement is going, etc. So here's the Fibonacci Retracement Tool. I'm gonna adjust it to how I prefer to have it. I don't want the trend line in the middle because I'm gonna have trend lines on the chart. Take off the trend line. I only need 38, 61, and 78. So everything else I'm just gonna, and I need the 0 and 1. So everything else I'm just gonna take off. Yeah. I don't want the background, so I'm gonna take that off also. I don't want the value, so I'm gonna change that to percents. I don't want the prices, only the percentage I want there. We can uncheck this. You can leave your font size to whatever size you want it to be, and I want it on the right side of the chart. We can leave the color. You can get whatever color you want, black, blue, whatever color you want. You can adjust it, and yeah, now that we have adjusted the Fibonacci retracement tool to our liking, so we can use it on the chart. Here's how we're going to use it in the trend. Let's just delete that. We only use the Fibonacci retracement tool when the market is starting to retrace. So if we're on the 24-hour time frame, once we see a change of character on the 4-hour time frame, then we know the daily time frame is doing its retracement. If we're on the 1-hour time frame, if we see the 15-minute or the 30-minute time frame giving us a change of character, then the 1-hour time frame is doing its retracement. All right, so that's basically how you do it. If it's a 4-hour time frame, look for a change of character on the 1-hour time frame, then you know that the 4-hour is doing its retracement. Let's say we're on the 1-hour time frame. We're gonna jump a time frame lower to look for a change of character first. And remember, we're working within internal structures, so to not be confused, because when you go down to the lower time frame, you're gonna see multiple swing highs and swing lows. So outline your recent high on the time frame that you're analyzing on. The time frame that you're analyzing on it's different from the time frame that you take an entry or you look for an entry or a setup. All right, so this was our last high here. So we have the line here outlining our recent swing high. So we're gonna go down to a lower time frame. You're going to see more candles, and that's perfectly fine as long as we've outlined our swing high there. Okay, so this is on the lower time frame. Here is where we outline the last high on the time frame that we were analyzing, so we don't get confused. It broke this swing high, giving us the change of character. I can highlight it. Because we have the change of character, we can come in with our Fibonacci retracement tool. So this is the last high on the time frame that we are analyzing on. We drag it to the low that initiated the pullback. We have the change of character. We see that the market is forming a trend. We have two swing highs and swing lows. See, we have a swing low here. We also have another swing low here, and the market retraced to the 38% fib line. So now we can come in with our trend line from the low that started the pullback, connecting and ensuring that all candles are on one side of the trend line. So it's from there to this swing low here. And as you can see, the market played out exactly how we would have wanted or expected it to play out. We waited on the swing, on the trend to form, a proper trend to form, and then we waited on the market to retrace to the 38% fib line. We also came in with our trend line. We avoided certain fake outs, because imagine we didn't wait on the market to retrace completely to the 38% fib line. We would have drawn our trend line, connecting it to this swing low, and we would have undoubtedly be faked out here. So in order to avoid the fake outs, I recommend that you wait on the market to retrace to the 38% fib line. I'm going to show you another example. So here is the other example. We're going to wait on the market to retrace, do a retracement, give us like a bullish candle because this is a downtrend here. Now we go down on the lower time frame. We wait on a change of character. And remember, highlight your highs so you know which high was the last high. The break of this high right here, we have the change of character. And the market starts to retrace. So now we come in with our Fib. We wait on the market to retrace to the 38% fib line before coming in with our trend line. All right, the touch of the 38% there. We all know this. If trading was according to textbook examples, no one would fail. No one would give up on trading because it's according to the textbook. The swing highs and swing lows, they're not going to always be perfect. But once you wait on the market to pull back to the 38 and you see that the trend is developing, you see that a trend is developing, we have one swing low here and then we have another swing low here, we can come in with the trend line. We're ensuring that all candles are on one side of the trend line. No, I'm not seeing any other swing lows to connect it to, so I'm not going to come in with anything steeper as yet. We need to see what the market does. We do have a swing low there. We do. I wouldn't come in with anything because it failed to break the recent swing high. It failed to break this high here, so I wouldn't come in with a steeper trend line. Some other people would connect it, like they would come in with a trend line like this, and it's definitely fine. If you really trust yourself like that, you can come in with something steeper. But I because I'm in the trade for the longevity of it, it doesn't really matter where I get the entry. So we just wait on the break of the trend line. And there is the break. You enter, you target key levels, you target whatever you want to target. If it's this low down here, you target it. If it's a key level, you target it. If it's previous support and resistance, you target it. Psychological levels, you target it, etc. And see, the market played out exactly how we expected it because we waited on a trend to form. And remember, it's not always going to be a textbook example. All right, so we do have the swing low here. All right, and we do have another swing low here, so that's two swing lows. All right, we came in with the trend line after waiting on the market to reach the 38 as well. So this is a prime example. As long as you have two or more swing lows, that's fine. If it's only one, be a bit more skeptical because you are going to probably fall for a fake out. But that's basically it for the Fibonacci Retracement Tool. You either draw the tool on the time frame that you're analyzing on or the time frame that you're looking to place an entry. As long as you wait, as long as you see the change of character, the market gives you the change of character and it retraces to the 38, then that's definitely fine. That's it for the video. Thank you for watching. Thank you for tuning in. Please like and subscribe. And we're actually at 700 subscribers. It's 700 plus. I don't remember the plus, but it's crazy. It's mind-blowing because I remember a couple weeks ago I was asking I was actually wanting to reach 700 subscribers and we're finally here. It's crazy. It's mind-blowing, but I appreciate you. I appreciate everyone that leaves a like, leaves a comment, you know. Bye. Thank you.